So we're systematic, models-driven exposure to Bitcoin. And as Marty mentioned, we've been able to outperform pretty significantly, specifically Bitcoin over the last 20 months or so. We've outperformed Bitcoin by about 640% gross. So that's 260% net since September of 2019. So that's with us up 1,150% gross, with Bitcoin up around 510 over that same time period. Specifically, our goal is to outperform Bitcoin through cycle. So catch the meat of the up moves and avoid or profit from the meat of the down moves. And we do that through actively managing exposure to Bitcoin. We don't necessarily do that by diving into the alt landscape. So the risk adjusted nature of our performance is fundamentally different than a lot of our competitors in the space, who may or may not have larger absolute returns than we do, but accomplish that through taking a lot more risk than we did. A lot of the conversations so far this morning they've mentioned alternative assets and the opportunities there, specifically in the context of what do you do when the government is going about basically full-blown modern monetary theory and printing trillions of dollars. 25% of all dollars in existence were printed in calendar year 2020. And so, Bitcoin is a hedge. It's an insurance policy against, monetary and fiscal policy irresponsibility from central banks and governments globally. Around the margin, that narrative got a lot stronger in 2020, and it's looking like it's getting even stronger still in 2021. And so that brings up this question of, okay, so if you want to get a little bit of exposure to Bitcoin, how do you go about doing it? And, in the context of active management, why? And because there is incredible opportunity for asymmetric risk reward. We believe this can be the best performing asset class in the next 5, 10, 15 years and likely beyond, but it is a nascent asset class. There's a lot of volatility present. There's a lot of risk present, but within volatility and risk presents the opportunity for a lot of alpha, substantiated by our performance. And so that's why, we view ourselves as kind of the right hedge fund at the right time. A lot of strategies in traditional asset classes have been somewhat crowded out from, for hedge fund strategies, but there's still an incredible amount of alpha opportunity in crypto. So the team, we'll kind of dive into my background and Travis's background. Travis is my business partner. He's our chief investment officer. He spent a career in traditional hedge fund investing, was at Magnetar in Chicago, and then after that went to be a portfolio manager at Point 72, Steve Cohen's hedge fund over in New York. There, he was running a $200 million long short energy materials equities book before kind of falling down the crypto rabbit hole in summer of 17. And, we decided to launch Ikigai in Q1 of 2018. My background, so I grew up on a family farm in Washington State, 5th generation. So my great-great-grandfather homesteaded there in 1887 under the Homestead Act, which if you remember from, history class and growing up is where you kind of raise your hand and tell the government that you'd like to live somewhere for a few years, and they just kind of hand you 160 acres. We have that certificate signed by Grover Cleveland, the 22nd U.S. president, obviously physically signed because they didn't have any computers back then. Pretty cool little piece of history there. It was a fantastic way to grow up. You learn a lot about work ethic and accountability and responsibility and discipline and all that. And then on my mother's side, my grandfather was a fighter pilot in the Air Force. He flew F-101s and 102s in the Air Force or in the Korean War. and was a big mentor and inspiration of mine growing up, and convinced me to look at the Air Force Academy, which, if you're lucky enough to get a congressional or senatorial nomination and are competitive academically and athletically, you end up with, a full ride scholarship. And if you make it through, you commission as an officer and you can have a guaranteed job on the other side. I was lucky enough to get in, and I went in wanting to be a fighter pilot. But I'm sure a lot of people on this call have seen Top Gun, and they remember the scene where Goose had to eject and hits his head on the canopy. And so in between, your summers at the academy, you don't get summers off. They just kind of put you to work in various different programs. So one of the programs, you go visit an Air Force base, and you kind of get to do whatever that base is known for. So I dropped Luke Air Force Base in Phoenix, Arizona, which is the #1 F-16 base on the planet. And which meant I was going to get an incentive ride, as a 19-year-old kid, to go up in an F-16, and the pilot was going to say, take the stick and try this and try that. And but before they do that, you go through a pre-flight physical of, how tall are you? You got to make sure that you're going to fit. So I'm 6'7", and I was nowhere close to being able to get a waiver to fit in a fighter. So I had to change my whole career path. I changed my degree in economics. I started an interstate trucking company the next week. It just made sense growing up in an agrarian family. And then, my fast forward to 2013, I was introduced to Bitcoin by a cousin of mine that was running a Bitcoin exchange at the time, which, if you're familiar with the timeline of crypto, this would have been, kind of right around Silk Road timeline, pre-Mt. Gox. And I'd grown up loving technology, building my own computers, doing all sorts of geeky stuff. And this mix of kind of Austrian economics combined with financial technology just made a ton of sense to me. And so I put together this whole business plan, and I took it to a finance professor of mine, really well-respected investor, sat on like the Alaskan retirement system, the Academy endowment. And he looked at me and he said, Anthony, you want to go build a business and magic internet money that drug dealers are using to buy and sell drugs on the internet? You have to consider your reputation here. And you got to consider the Air Force's reputation here. You're about to be an officer in the Air Force. And so he put a pretty firm boot in me going about that. As you can imagine, as a government employee, they control everything about your life. If you want to go run a marathon, you have to get approval from your boss because it's considered a high risk activity. And so I commissioned as an officer, as a software engineer and contracting officer. I was in the Air Force. I got out in May of 19 as a captain. Along the way, I was part of, a couple of Techstars companies as a CFO and software engineer. One of them got into Barclays Financial Technology Accelerator in London. Another one was in the Disney Techstars company, or Disney Techstars out in Los Angeles. Los Angeles is where I met my now business partner, Travis. And in Q4 of 17, there was this report that had come out that something like 175 crypto funds had just been launched. And so we're kind of scratching our heads, thinking to ourselves, well, shoot, did we miss the boat? Did we miss our opportunity? And we're going around having conversations with these quote unquote fund managers. And what it looked like was really just guys and gals that had held a stack of, Bitcoin or Ethereum through the 17 run up, and now thought that they were qualified to be fiduciaries and manage other people's money. So by and large, there was just this severe lack of institutional grade investment sophistication being deployed into the asset class. And that looked a lot like opportunity to us. And so we formed Ikigai in Q1 of 2018 and spent the whole year building from a regulatory investment engine, of operational compliance perspective. So you can imagine when you hop on the phone with your lawyers and you tell them you want to build an institutional grade product, their ears kind of perk up. And, oh, well, we can spend a lot of time on the phone waxing and waning philosophical about the legal risks of doing this and, kind of run the bill up a bit. And so we got launched with GP Capital December of 18, LP Capital January of 19. We did not take any hedge fund seeding deals, took no dilution kind of at the GP level. So Travis and I funded the entire thing ourselves. And so we launched with 2 checks from 2 LPs of $100,000 a piece. Fast forward to today, we've got over 160 partners. We've got over 150 million in AUM, We've got partners all over the world, every continent except Antarctica. If anyone knows anyone down there, I'll gladly give them a fee discount to invest with us. So I can say that we've got partners on every continent. And so it's worthwhile to do all of that. And the strategy, as it's evolved over that time, at Magnetar in 0.72, those investment engines had very firm foundations in qualitative research and fundamental valuation, which we like to think in a very simple way. You just have a lot of arrows in your quiver to determine whether you're paying a lot or a little for a particular asset in traditional asset classes. That's how Travis ran the book at 0.72, and that was the inspiration for version 1 of our investment engine. So we were originally looking at the top 150 liquid crypto assets, by market cap. We had those broken out in a sector, subsector, just like you would the S&P 500, and had a full qualitative and fundamental review of all of those. And, you should be able to go do all of that work and go long your favorites and short your least favorites and earn a nice return doing that. So the first 6 months of our track record were focused on that. And it turns out that crypto is just not that rational yet. Pumpamentals are probably more important than fundamentals. And so at the same time, we've been doing all of this quantitative work. A bunch of quantitative signals surrounding the Bitcoin ecosystem. And we said, well, we should be able to model these out and determine which ones or combinations of which one could help us outperform, specifically Bitcoin on a through cycle basis. So again, catch the meat of the up moves and avoid or profit from the meat of the down moves. And we did that, and the results were compelling. And so we decided to make the official switch to programmatic discretionary, which is what our strategy is called, there in September of 2019. And, the outperformance has been very strong since then. And so there was this great narrowing to, from an investable universe of 150 down to basically, Bitcoin and now Ethereum, because we've built models around Ethereum as well. And the way to think about our strategies, it's not that we're married to Bitcoin. Bitcoin could very well be Ask Jeeves, and we've yet to see Google. But the benefit to being long short is, we always have the ability to change our mind. And so, why Bitcoin? When you have a quantamental investment engine, which is just the mix of, quantitative data and fundamental analysis, which I don't know if that was invented at 0.72, but it was certainly thrown around a lot. You need to work with the assets that have the most amount of data and the most amount of liquidity. If you think about the amount of data available around the Bitcoin ecosystem to go do data science on top of an alpha harvest, if that's an ocean of data, as soon as you move down market cap to number 10 or number 20 or 30, that ocean dries up into a lake or a puddle or pond. And what dries up along with it is liquidity. If you want to go shuffle your feet on $150, $300 million worth of Bitcoin, we can do that in, a matter of minutes. Slippage is going to be minimal. It's going to happen, darn near last price. If you want to go do that on, an asset outside of the top 10, you're probably going to experience double-digit slippage, both on both sides, long and short. And so, the scalability of our investment engine is, very important to us. If you look at all of the capital that came into the space over the last 4 to 6 months, by and large, that capital came into a passive Bitcoin position. And, largely under the guise of that narrative of Bitcoin as an insurance policy. It's a hedge against monetary and fiscal policy irresponsibility. But what they have not experienced is all of those allocators, the billions of dollars that are now at work there, they have not experienced a Bitcoin bear market. Bitcoin tends to go through these cycles of going up a lot and then coming down a lot, generally over the course of about 3 or 4 years. And so when, we hit this next cyclical top, they experience a down 40 or 50 or 60%, they're going to be pretty motivated to look at, well, there's got to be an opportunity to, have a bit of active management around this, some downside protection, reduce volatility. And, given our focus on effectively exclusively that, Ikigai is going to end up being kind of the premier option for active management, long and short, in the, larger assets within the crypto asset space. So Bitcoin, Ethereum is what we focus on right now. We've got a little bit of exposure to DeFi, but that tends to be, kind of 15% or less of the portfolio. I know I want to save some time for questions so we can kind of tailor this. Or did we get those done, Marty?
In 2 seconds, but Anthony, I just wanted to ask you some questions about this political environment right now. And it seems like Turkey in particular, obviously the lira, I think it's the Turkish lira, is devaluating, and now they're talking about making Bitcoin illegal. And I don't think that's a phenomenon that's happening only in Turkey. I think you're seeing it in many parts of the third world or emerging markets where people want payment in crypto rather than in whatever denomination currency they have. Can you talk about that a little bit?
Yeah, so it is important to note that a nation can ban their citizens from transacting in Bitcoin, but they cannot ban Bitcoin themselves, like Bitcoin itself. And when I say Bitcoin, you can also kind of translate that to the rest of the crypto assets within the space. So that distinction is important because that decision is largely a biased decision because they're afraid of the competition from Bitcoin. A lot of us here on the phone likely grew up in areas where we were blessed with a first world currency. We were blessed with the US dollar, the euro, the pound, the yen, something along those lines. And so it's hard for us to imagine why we would need another monetary system, why we'd need another option. But the Human Rights Foundation says that over 4 billion people live underneath an authoritarian regime. So that's 4 billion people that can't trust their government to run a sound economy, to run a stable currency. And, something like Bitcoin or, kind of this technology broadly is kind of a vote for freedom. It's a way to step outside of that regime. And then on the other side of that coin, you have the hedge against, monetary and fiscal policy irresponsibility. And so when one of those countries in, that other half of the equation makes the decision to ban Bitcoin or ban crypto, they're making a decision to, shield their nation, their citizens from an immense amount of economic opportunity. It is relatively analogous to banning the internet. If you were a country and you banned the internet back in the mid to late 90s, it's not hard to fast forward a decade and think about the billions of dollars and potentially trillions of dollars of missed economic opportunity that you shielded your citizens and nation from. India is a great example here that they've had different types of potential regulation and banning around crypto come and go over the last several years. That's over 1 billion people that would then miss out on, kind of the next evolution of the internet, the monetary internet, the internet of money. And that's a really big deal. You'd be making a deliberate decision to, keep your country from progressing and keeping up with the way the rest of the world is headed. Right now, most traditional capital markets operate 252 days a year, 8 hours a day. It's not hard to believe that the world's going to continue trending toward digital, that the world's going to continue trending toward operating on a computer's time frame and not a human's time frame. So, Bitcoin's 24/7, 365, the crypto capital markets are always open. They never shut down. That's a 4.5x increase and just amount of hours that these capital markets are open. That's a big deal, and that's the pace of innovation and adoption and technology advancement and user experience. All of that just occurs at a much faster pace. So a ban, that has very material impact on the economic prosperity of a nation. Looking in some of these questions here, looks like the most common question is, what other events in 2021 could possibly impact Bitcoin positively, and which are most likely to happen? So Jay Powell coming out and saying, we're not even thinking about raising interest rates, additional, around the margin, that narrative needs to, continue. He needs to continue coming out incrementally dovish. If he comes out incrementally hawkish, not only is Bitcoin not going to like that, basically all capital markets are not going to like that. And then Biden and the stimulus packages, we've already done, a couple trillion this year. We've got a couple trillion that's, planned, and then, some more speculative that's on the way. Those all drive, significant, there's a significant catalyst for finding hedges against inflation. Other things would be institutional adoption, as treasury management, as large reputable allocators continue to allow, exposure not only within their own books, but also for their clients, so that's Fidelity, Mass Mutual's allocation, Guggenheim, Paul Tudor Jones, Elon Musk and Tesla, all of those are big deals. If you think about, one of the most prominent aspects of Bitcoin is its defined policy, monetary policy, and that
Thanks.
How much Bitcoin is going to come onto the market every day. Right now that number is 900 Bitcoin a day. So at a $50,000 price, that's 45 million in new supply coming on every day. So in a month, that's 1.35 billion, and in a year, that's 16 billion a year. Right now, we know internally of plausibly around 100 billion in spot physical demand for Bitcoin, passive demand for Bitcoin from those institutions and allocators and treasury management for companies that doesn't yet have access. Okay, so if you've got 100 billion demand and you've only got 16 billion in new supply, that's relatively simple economics. That's 7+ years of the new supply that already has a home, and it hasn't even been printed or mined yet. In case of Bitcoin, for at a $50,000 price. All right, double that to a $100,000 price. Now you've got 32 billion in annual supply coming onto the market. 100 billion divided by 32 is 3.5 years. So the next halving is in 2024. So all Bitcoin that is going to be issued between now and the next halving already has a home at $100,000 Bitcoin price. And that doesn't even.
Can I just cut in here a couple?
Yeah.
So 20% of Bitcoin is lost.
Around there, somewhere between 10 and 20%. Yeah, and then you've got Satoshi's coins in there, which is about 10% as well. 18.5 million Bitcoin or thereabouts has already been mined. It's a sliding scale because of that halving of how much Bitcoin is ever mined within a 4-year period. So,
meanwhile, a lot of payers are starting to announce that they're going to take Bitcoin. They're going to accept Bitcoin. Can you discuss a little bit and what the impact of that is on the marketplace? I mean, how are they getting access to Bitcoin if it hasn't been printed yet, as you said?
Well, yes. I mean, that's just simple supply and demand. And then in order to shake loose the next marginal willing seller, you have to, send the price higher. So there's always a marginal willing seller depending on what the price is. What I mean by the mining example is just, that's new supply. That's not supply from, people that already hold Bitcoin. to, like Venmo, I think went live today with their offering in allowing people to transact. And that's just on-ramps and off-ramps. So that's allowing a larger ecosystem, a larger audience to get exposure to and use, this technology, use these assets. Bitcoin tends to derive a portion of its value from network activity. How many nodes do you have in the network, and how vibrant and growing is the virality of adoption? And so something like Venmo and all the treasury management things that have been announced, and all of the large allocators and institutions getting involved, it's like a Cambrian explosion of the amount of people getting involved. So it's very, very positive for the space.
Sure. You've got about 3 or 4 minutes. You had talked about how 130 crypto hedge funds came online back in 2000, at the end of 2017. And I knew a lot of those guys. I mean, they came online and they failed immediately. So, I mean, probably 10 or 20% survived, right? Most of the other ones are just gone.
That's approximately.
Right. So I'm just wondering if you can kind of address why you guys have survived the test of time the last couple of years. And if you can maybe take just a little bit of a deeper dive into the technology that you guys are using, that there's machine learning, AI, you talked about being quantamental, are you guys actually going out to, the marketplace, and do you have listeners on social media? How do you see that? And if you can just spend 30 seconds and throw out your opinion on NFTs as well, because, again, we've seen it all. I mean, we were exposed to this early by Dan Moorhead and by the Stevens brothers. And so my real question is, we always have this conflict between the intangible asset, which Bitcoin is and some of the other cryptocurrencies are, and then there's the projects. So, to me, NFTs are falling in that intangible asset category again. So give some insight into your fund, how it operates, the technology you're using, why you do better than others, because it sounds like you have phenomenal success, right? So number one, that's number one. And number two, just spitball a little bit on NFTs and things like that. Thanks.
Yeah, no, happy to. So on the data side, we've built a lot of technology internally. A very unique part about this asset class is there's an enormous amount of public data, on-chain and on-exchange data, as to what's going that can tell a story, fundamental story about what's going on in the ecosystem and the health of the current market structure regime around a particular asset or combination of assets. And so there's terabytes of data that we've ingested there, built a proprietary kind of technology warehouse with data processing inside of it to be able to ingest and normalize, standardize, warehouse, and then subsequently go do data science on top of. There's no commercial off-the-shelf software, so we've built all of that internally. And when you go ingest those terabytes of data, searching for relationships that have statistically significant predictive power, you end up finding a lot of signal. And when you combine that with a fundamental layer on top, a discretionary layer on top of what's going on in the world, global macro, crypto macro, so that's the pace of innovation and adoption in crypto specific news flow. And to more specifically answer your question, yes, there is machine learning that go into the models. You end up with an investment engine that clearly we've been able to extract a lot of alpha out of. A big reason that our investors come on board with us is to be able to sleep easy at night, knowing that they have exposure to this space that has potential asymmetric risk reward, while having some downside protection against the volatility.
You get down to the chain level, looking at transactions, and you can probably see who's doing transactions. You may not know their identities.
That's right. Yeah, you can. That's called wallet tagging. We look at exchange flows, wallet flows, relationships between the perps and spot physical, basically anything within the on-chain and on-exchange ecosystem from a data perspective. You can assume we're looking at it. There's a lot of signal there. It's a very nascent technology and industry. These are not relationships that have been taken advantage of or have analogies to traditional markets. So there's just an enormous amount of opportunity from a quantamental perspective. And then on the NFTs, there is, it's something we pay a lot of attention to. It's not a highly liquid market per se. A simple heuristic and a way to think about an NFT is you're buying the signature, not the actual piece of art, because in a digital world, like, you have infinite replication on, an image or an asset. Signature that has value, not that, because you can just copy paste the asset. There are a lot of opportunities there across media that, it's early, and, we've got our eyes on it, and it probably doesn't belong in this specific fund, because this fund is, something that we're going to raise hundreds of millions or billions of dollars of capital into, and focus on highly liquid, active long short management and Bitcoin and Ethereum. And if anything else floats up, we'll build models around that.
Yeah.
But we may launch another fund or two to focus on DeFi and NFTs and all that. So.
Right. Yeah. I think that the DeFi movement is a very big movement. And I always listen to the Andreessen Horowitz podcast, and they've got some fantastic DeFi people there who really are probably 10 or 20 years ahead of where we are today. NFT is very interesting, and it's very, I consider it to be kind of mysterious, right? Because there's buyers, but then, secondary markets don't really exist yet. So I guess we're going to figure it out. I just don't think the expertise is with the, art auctioneers houses, so to speak, right? They're kind of old world and very different, and authentication is already taken care of, I think, with the NFT. So that's something that's really needed. So it's going to be interesting to see how that all plays out. But Anthony, listen, fantastic performance. I'm so glad to hear you guys continue the performance. I mean, compared to so many of the hedge funds that we see who knocked it out of the park last year but have been getting crushed this year, it's great to see you guys continue to succeed. So way to go, and thanks so much.